Good morning, everybody. Welcome back. All right, let's get started. So, too far, too fast? Oh, yeah. And I'm starting with the cues here, but everything moved like this. And was it surprising? Yeah. I mean, some of these markets weren't even at support somewhere, like the transports and the small caps. But with two big wide range bars, I mean, this looked like it needed to come down a bit further, maybe down here, and it didn't. So things started out the beginning of last week tentatively, and then everybody knows the news. Um, Fed chair said, "Oh, everything's okay." The short end of it, or the belief that they were done and interest rates raises probably over. We'll see. Anyway, giant bar. Hey Pam, how you doing? See you out there. Um, Giant move up. Wednesday, Thursday, and Friday, unfilled gaps below. At some point, they'll get filled. Um, the the cues, which fell a little further, have a little room up to that resistance area up there. Let's see if we can just put that over everything. Yeah, so you can see the congestion up there with the pivots where it's close to. It's probably gotten far enough. Markets aren't moving that much right now. Um, they could go a little higher, even though they're extended. We don't want to get in front of this too fast. Buyers typically don't give it up all that fast, but things are extended and they're likely to turn up here. Just simply what's over there to the left. How far has it moved? We've got these unfilled gaps. It's created a void down below. So the general thinking, of course, will be by the pullback. And the next part of the analysis, well, pull back to where? And that's why I've marked these unfilled gaps that are in various markets. And this larger one down here at the 20 on most of the markets coincides with, like some support. And this gapped right through this resistance on, that news. What was that? A new day. Trying to line it up there. Yeah, it gapped up the next day. And just gapped up through that resistance and then stalled at the next level. And then it gapped up again. And this isn't uncommon when a move starts like that it won't stop until it reaches a destination called price resistance or where there's supply. Now it's just at the beginning of it. And again, bar by bar, it would have to break a prior bar's low, which is unlikely to do today by the size of this bar and the way it's starting out. Um, and the way it's starting out, it could go a little further higher. And so what we want to see maybe today, or see if the momentum begins to stall here. And so common sense, momentum stalling, in this case, I'm referring to a narrower range bar, will be easier to violate a prior bar's low. Now, that doesn't violate this trend. There is actually, I would say, in a sense, you could call it, there is no trend because there's no pivots. It just moved vertically to the upside. And so now as it pulls back, into the void below, you got to be aware where the unfilled gaps are. Just set alerts, whatever chart you have up in your thumbnails to watch the market, fine. But look, a pullback into this unfilled gap, just give or take. Let's assume it goes a little higher today, about 50%. The 20 MA is there on the cues. Would make sense. And at that point, it really shouldn't fall much further because then it starts to become in question whether buyers really want to step up here. This demand, which was super strong, um, it's got to continue. And if it is as strong as it appears to be, it may not even fill this gap. It may chop around up here, fill this upper one and chop around here, and then make an attempt to move up to this next level up here. And so as we measure that strength, look at Is it here? Yeah, I can hear. This is just day-to-day advancers minus decliners. And this is, well, you have to go back many months, if not more than a year, to get a spike where it pushed up here above this 2000 area. So it was broad-based, the move up. Many times we hear, oh, the rally looked strong, but it wasn't broad-based. This was broad-based. Maybe look, holiday, everybody's expecting the Christmas rally. Maybe too many were expecting the Christmas rally. I was in the camp of thinking, hey, this kind of a pattern would come down and do a little retest versus a V bottom. V bottoms are typically associated with bull market uptrends where prices pull back and they make V's and go up. They're not typically associated with bear market corrections. And they say, well, is that a bear market? It didn't go down 20%. Well, the transports did, the Russell went all the way back down. And so there was some strength in certain sectors, but the markets were in a bearish mode. And so now this V bottom, it's got to create support. And no matter where we look, it's pretty much the same thing. So looking at the spiders, you see the same thing. Unfilled gap, unfilled gap. I mean, it blew through the 200, the 20, the 50, and it's up here near this pivot high. And you see it's picking up and down. Where is it at here? It's at the top of yesterday's range. And, one of my points as to, look, this may be extended. I don't think it's going to get a heck of a lot more extended, but it isn't uncommon. It may seem illogical, unlikely, but look, when moves like this begin, it is not uncommon to move above a prior pivot high. And so that, I think that would be ideal as far as looking for a retracement to start. No one's going to deny that this moved too far too fast, but it hasn't even come close to a prior bars low. Taking out this pivot high at that point, maybe just anybody that has, a bearish view after this, there are those, that do, that begins to deteriorate that view even more. So that's something that we'll be looking for to see if, this morning strength continues, takes out Friday's high, maybe can move up above this congestion, and then maybe roll over. Maybe it hits this 440 level here, which look at the Qs and just see it's not the highest level of open interest going out into next month or even this month, which is interesting. So a little bit of doubt, even after a move like that. We'll see what happens there. So be aware of the unfilled gaps. Set your alerts. It's easy to forget them, if they get filled a day or two later. So let the computer watch. All right. So again, this was down. It's up. SPX. And as you would imagine, these levels came way up from where they were. We're down here at, I think it was 42.20 on Friday, which, of course, no, was it? I forget what the numbers were. I'd have to go back and look at my notes. Anyway, it didn't come close to hitting it. And so now on the upside, excuse me, this pivot high up here, I'm saying, okay, it's already moved too far, too fast. Could it get up here? Well, yeah, it could. We've already discussed that. Now, this little dashed line, so I see it, this gap here wasn't completely filled. So could this get up there from today? Well, let's assume it can and take out that pivot high. And I say, where's our lines of defense? Well, we got this unfilled gap. And our strike is 44.05. It would be a greater than 100% retracement. So even if it gets close here, it won't be, I believe it will not be sustainable. And it would pull back in again. And of course, every day you have to assess what's happening during the trading day. 43.20 down below. It's up here. That looks like a more reasonable point that would be hit. There's an unfilled gap there. So I'm leaning more toward the upside would be limited. And I don't think it'll come down here today, but we'll see. And they say, it's opening up here. It is at resistance. What's going to get this to come down that far? Well, we'll just have to see what things play out. Raul says, do you have a master trader chat group? I would like to join the community. Well, obviously you could join the green room. And as we come into the end of the year, the prices are ridiculously low to do that. You could be there the whole year, but we don't have like an open chat room, Raul, where we talk in there all day. We've got a group on Facebook where, Dan posts charts there and there's some conversation. So you could find it on Facebook, or I'll post it when Dan starts to speak. You could join there, but join the green room. I mean, look at the annual prices at the end of the year here. I mean, it's dirt cheap. I mean, they're every day, conversation with the other traders. We've got some great people in the room that share ideas and good conversations throughout the trading day and education. So I would definitely consider it. And we have people that aren't there all day, meaning they come in for the mornings or they come in the afternoons and take advantage of, because they're working and they take advantage of the time that they can. So Jose's asking me, is a rally or a trap? Well, I don't know. But look, we don't know the future. We just look at this was powerful move. It was broad-based. If we look at our internal gauges, and this is something that I said we'd be looking for a couple of weeks ago if the market rallied. The bottom didn't happen the way I had anticipated it. But what I said was at that time is that we would be looking for something like this to confirm. Now, we could go and look at a whole bunch of indices to see how they moved last week, and you would see a lot of them moved very strongly. Or you can look at a breadth internal gauge like this, and what I explained was it would go from the bottom of the range to the top of the range with one giant move, and historically that confirms what happened. So this provides us a bias that pullbacks are buyable. Now, can they go up here? We don't know. We have to see how this reacts. There's a void below. So the most bullish thing it would do is chop around sideways for a few days. It would spike down some small amount and spike right back up again. So you look for those clues or tells about what buyers are doing. How aggressive are they? I mean, sideways at resistance is bullish. A move down that's immediately reversed back up, that's bullish. So we have to see. Sentiment is still not at an extreme. It got way extreme here. Like not this, it hadn't gotten this extreme in years. And that set that little bounce, and then it came all the way back down close to this 4,100. And, it was a little less so, but it hasn't totally evaporated. So that's a good thing. So recession is not driving the market. What's driving the market is, look, there's general measures of what confirms a recession. To me, the market's in a recession or it believes in recession. And how do I say that? Well, the transports fell 20%. Small caps fell below the prior range. There are stocks out there that have been decimated 50, 60% or more. So those kind of occurrences are associated with bearish markets. And when you talk about transports moving low like that, it typically happens ahead of a recession. Now, one of the things that we discussed last week, well, I don't know about here, but I certainly in the letter, was these interest rates. And a couple of weeks ago, I pointed out that the 13-week was rolling over. And I speculated, is this saying the Fed is done? Now, there's more evidence of that. Last week, what drove the market was the drop in interest rates. Okay, the Fed is done. We got some weak economic data. The 10-year falls. all the way down here. What you don't want to see, you may think you want to see because lower interest rates are positive. You don't want to see this 10-year collapsing down here because that would be more confirmation of a recession. What you want to see is this begin to hold up, maybe get a little bit lower, and this begin to hold up, and this begin to kind of crawl down, which would communicate that more and more are believing that the Fed is done. Because what we want to see is this yield curve measure, the difference between these two values, begin to come back up. But we want to see it come up by this being a little lower or steady here, and the 13-week coming down toward this number. As you can see over here, the 5 versus the 30 and the 5 versus the 10 are positive. They're closer together. The 3 versus the 30 are still negative. So these are things that we continue to monitor on a consistent basis. Another thing I pointed out in our newsletter is that what typically happens after a move like this is this breadth gauge comes down to the 0 line. And that would be our measure of wherever the S&Ps are and the Qs. This being at the 0 line should be a good reference point where the market would try to advance again. All right. Come into the green room. We can have these kind of conversations on a daily basis if you ask questions. So I got limited time here. I've already used a lot of time, and Dan has to come on to review. But, there's the transports getting crushed all the way back down here. That's not a good sign for what people believe is happening in the economy. The Russell, all the way back down to the bottom of the trading range, which it's been in, right, since the middle of last year. And this is, in one instance, it's a measure of institutional participation in speculative stocks. And so they bought this aggressively off of the low. Now, a technical bounce, absolutely. What does it do from here? Same scenario. It's at resistance. How does it handle this? Does it fill the gaps? So we don't need to know the future. We need to know what is. And then what happens in this moment that'll guide us to our future beliefs. And that's what we're up against here. Our beliefs right now is it's moved too far, too fast. It might go a little bit more, but entering longs at this point, unless you're nimble, you're likely going to get caught in some, reversal. That's just common sense. Oh, Alex is saying he chatted with Powell yesterday and he guaranteed no more rate hikes. Oh, see, we got some inside information here through Alex. See, in the green room, we get inside information. Okay. How's look a Bitcoin? That's doing nothing here, flipping all around. Interest rates are steady this morning, up a little bit. And so they came down to support. They're bouncing, reasonable. So look, if interest rates continue to come up into this unfilled gap, the markets will correct, and we will look for them to roll over here just like we would anything else, and the market to roll up. So we have our job of what we need to look for in the coming days. There'll be more news coming out, economic news, whatever, earnings, of course. And so that's the factory work. With that said, it's all yours, Dan.
Good morning. It was a challenge coming up with trade ideas, but I think we did a great job of what we presented, because we say this a lot when the market gets either extended down or up like spiders. We still have like down here, we still had a bearish bias, but we were looking for patterns that were either continuation or will look like a new setup, which means closer. Well, let me do it on the bull side. So this is up too much resistance. We all know that. So I would never, ever, ever, ever give this as a long. It's just retarded. There's no setup, risk to reward, et cetera, et cetera. but there's a number of bullish setups that we find. Like, look at Hess. That's a 1, 2, 3. Now we're already in a put spread, but that's a Climo with a 1, 2, 3. I had this one in the weekend letter, and then no, what was it? Shoot, Alex, Citron. Look at this beautiful setup. And this is a thousand times different than the broader market. This is a new trade. It's a buy setup, bullish turn, 1, 2, 3, price void. So the problem is, Alex told me there's earnings after the bell, so I had to cancel it. So we're waiting for the turn. As Greg said, we're not going to jump in front of the train here, but we'll be hopefully finding a bunch of call spreads this week. I always glance at the Dow 30 to see what's up a lot or down a lot, and I just noticed that everything's green except Home Depot down $2. And there's a great example as a call spread. So it's up, it's a sell setup at resistance, it's gapping down. So this 30-minute low, perfect for a 4 DTE call spread for Friday. Now you got to go through the checklist, of course. How do you check earnings? Spreads are fine on Home Depot, but we'll check it out and see what the juice is. But that's a tier 1 setup if it occurs. Target here, breakout from a bottoming pattern. I gave this as a short put idea, the 111s or 111s or 10, I forget, that we're only going to get filled on a further retracement. So I gave a couple of those trades over the weekend that we're only going to get filled on a pullback on the short puts. A couple of earnings here, not a whole lot, but let me look at them. FRPT, and I say this would have been a beautiful example of a new trade if it wasn't gapping up so much. If that opened, just up a little bit, that's a new trade. So I'm emphasizing what we're going to be looking for new longs or shorts. VRNS alarm I just had go off. Alex, I think that was on your list. Let's see again. Education, and I'm telling you what we're looking at. This is totally different than the spiders. This went up, 2 inside bars, closing breakout. So this one is not extended. And I have a bullish weekly and monthly. So that is on my list. See how it sets up in the first 30 minutes. Looks great. VRNS, put it in a window. THS would have been a good, adequate new trade had it open flat and took out Friday's high. I mean, you have this resistance here, so it's not as good as that other one. But now it's down a lot, so I'm going to delete you. This is a gap breakout, but the gap's too big. You're gone. AMG, it's just a junky downtrend. This gapping down 63.50. No pattern. I don't know what to do with that. COS opening. Okay, COS is not bad. My alarm went off pre-market actually. So it's a 1, 2, 3, but not a good price void. Let me just reset my alarm at 770 since it's backed off now. Sats, gapping down, bottoming pattern, EF. Gapping down a little bit, bottoming pattern. Reiner Air. That's a big gap. It's a discount airline, but the gap's too big. And I noticed that was made Jets ETF gap up a few pennies. Now, Pod is one that we sold naked puts on. into earnings last week, and my up alarm went off. So I was hoping this would build a higher range base, bullish weekly. So that there's nothing to do yet, but it's a definite watch during the week to see if it sets up. Let's go up here. Target. Target we talked about. SYY, and this is an adequate new trade. You see how it's close to support in the 20 and not up 5 bars far from the 20. So I have an alarm in this. This looks good. Save. It's just a run-of-the-mill Climo. But this thing fell so fast. I don't think it's gonna bounce very far. Does anyone know, just out of curiosity, did this thing tank because of maybe bad merger news? They were supposed to merge with JetBlue. Did JetBlue call it off? Or whatever, regulators? Yeah, CPB, you got to get over Friday's high though. I'd like it better if it didn't have that tail, but yeah, that's a watch. Oxy, there's no good price. Compare Thomas Hess with Oxy. Oh, you're saying put spread. Yeah, put spread would be okay. Tell me what the juice is. Go through the checklist. But in terms of a directional, Hess is superior for 1 to, I don't know, 2-3 day bounce. Because it has a void, whereas that one doesn't. Oki, I was looking for put spread idea. I think it must have had earnings because this is a big old gap reversal, but it has a void. So I set an alarm at 67.10 already. NDAC, a little bit similar. It's sloppy, but they're strong, and it's following a nice 180 with a void. There was no juice for put spread, but 30-minute high. Pizza up alarm. Sam, this is yours. Beautiful, beautiful 180 reversal that's making up the right side of a W bottom. There was no juice for a put spread, but beautiful reversal. Look at the weekly. That's what we call a retest with a new low plus closing range expansion bar. That is a beautiful short-term bottom. Flip here. LKQ, and look at the 15-minute chart. It's extended though because it was rallying all day. LKQ alarm went off. There's that's yours, Alex. I set an up alarm. That's worth watching for 1 to 3 day bounce. Casey up alarm. I think that's Sam I am. 30-minute high. Not bad. Oh no, I found Casey when I was looking at all the retail stocks. Look, here's oh, hold on, I'll come back to it. Mo up alarm. Sloppy, but it's trying to break out after that gap reversal. So here's XRT. It's up a lot, but I drilled down and scanned all the components. And these are the ones that I wrote down. AEO, Casey. And now Urban's up too far. And Alta, look, Alta's a bottoming pattern. And with the VIX falling so much, I didn't get good premium. Or maybe I did give this one put spread, I forget. Let me look. Alta. No, I did not. I just had an alarm is all. So it's not an official trade. But that's a beautiful 15-minute. It's lagging the broader market, no question about it. IWM's tanking on the 5-minute. The other 3 horsemen are rallying robustly on the 5-minute. I don't trade in the first 5 minutes, but typically on Mondays I just as a general rule, like to wait 10 minutes, but this looks great. So I have a number of tier 1 trades over 30-minute highs so far. Let me put that in a window. H-lit up alarm. Another great example of a new trade setup as opposed to 6 up bars. That's rested. It's close to bullish price action and close to the 20. All right, we were buying November $10 calls for a limit of 110. Okay, so yeah, the midpoint's 110 right now. So you get filled if you want in that. I had Zulu Sierra alarm go off. Let me see what's going on there. What's this? Zulu Sierra. What trade did I have? I sometimes forget. Okay, we're selling the 155 puts for 70 cents. Zulu Sierra. 55. 70 cents. So right now it's 60 and change. 70 is on the offer. So we are not filled on that yet. CMCSA low alarm. And this was either Alex or Sam's or Greg's. I forget. One of you three.
I pointed it out to you.
Yeah, then there you go.
Russell got slammed down.
All right, so yeah, my low alarm went off on this.
Demi's holding up. Hold on. Look at that, the short ones.
Zulu Sierra is good to go as posted, which we need a pullback. So that's why I wrote them that way. Gel. Yeah, that looks good soon. Yeah, it's following up it's 180 kind of pseudo bear sandwich. Looks good. Yeah, it looks really good. It's just a matter of how, aggressive you want to get in on Monday morning. It's right at that prior high. But I'll put it in a window. All right, the Citra, that would be her stupid earnings are messing up the trade on that. All right, Home Depot AD line gap down to 0, and now it's negative 650. All right, so Home Depot, I'm going to now set an alarm at 294. Actually, it's fairly slow morning in terms of my alarms on opens and new trades. Target coming in, and this is another one that I didn't even give a price, meaning a trigger price. I just said let's oh, it was a 109 puts for $1. Let me see where they're at now, which we're only going to get filled on a pullback. The 109s right now are 45 cents, so we are way off our desired credit. It's just too messy for me. Microsoft has, just day trade moving train. Tesla could keep going. There's a void there. I'd rather wait 30 minutes on Tesla. It's at the declining 20 prior high, but it's a nice gap. It's a nice pre-market strength, a little rounding bottom. 30-minute high, day trade Tesla. I like Meta, nothing. Amazon, they could go too, but it's further from its prior low, so it's more extended, but bullish 15-minute. And the video still, look at that 15-minute uptrends. Incredible strength. Uh, yeah. Yeah, we can set an alarm there. Let's go back to this one, CMCSA. Let me check. The premiums over the weekend, Greg, were stingy. So I don't know if you want this as a directional. Day trade looks good to start. 43.50. Yeah, it's only 18 cents making. That's not enough. Sam's Pizza here. If it had, well, it did kind of rest, but it's more of an end of day rally than base. If it had a better base, then I'd be more aggressive to get in because you need a big stop. Check the other opens here. Elgin, Hart, just Tango Whiskey. Tango Whiskey, we're in trail mode. So still, just let it take you out. I'll set a new alarm though, 91:55, in case we decide to get out early. If the markets are falling at that point in time. CVX is our only half lot put spread. Stop Friday's low. New ideas, JP Morgan, MA, AMW, ABBV looks good. All spread and short. Under, I would wait for Thursday's low just because it's so darn close. Zulu Sierra, we should have gotten a fill on that pullback. Yeah, Zulu Sierra is in. AD line keeps falling. So we know what that means. Narrow breadth, or whatever, was rallied this morning, but negative 900. So there's under the hood, there's more selling going on, which is good for our call spreads that we're looking to enter, which we have not yet. Cat in the hat. Let me look. Sam, would you say Cat in the Hat is your favorite Dr. Seuss book, or do you like Green Eggs and Ham better? Oh, and else. Yeah. I like Cat. Sure. Absolutely. Alex is a short under the low. Absolutely. I like it. Yep, I'll set an alarm. 2:38. August, put it in a window. And then we check call spread also. 245s, Cat in the Hat. Yeah, there's good juice. 245, 250. Yeah, 62. Yeah, I'll post it. 130.